Hi, my name is Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Welcome to Monday, June 8th, 2026. And today I'm going to announce something new we're going to do on the show. We're going to go to a little bit new format that we haven't used previously, but we've been recording Invest AI Savvy now for over 90 days. And I've worked really hard on the BuzzPulse system. And in spite of all my efforts, the BuzzPulse system, running reports and doing a detailed sentiment analysis every 6 hours for over the last 95 days, hasn't managed to identify one single high flyer. And a couple weeks ago, we saw Dell Computer and Micron come up to all-time market highs, and the BuzzPulse system completely missed those. So at a certain point, we have to get with reality and realize that maybe that system needs a little tweaking and a little bit additional work and maybe a little bit more intelligence built in. And speaking of intelligence, I decided to really enlist resources now that were much higher level of knowledge and understanding of investing and options than I actually have. I was looking for a co-educator that could come on to Invest AI Savvy and really provide additional value based on his or her educational or experience on Wall Street. And the person that I selected was based on my interest in using options trading to produce income. I did a little options trading myself, and always I was focusing on lottery tickets, right? Lottery tickets where I could put in maybe 5,000, and if it came in and everything lined up correctly, make 200 or $400,000. The fact of the matter is that almost never happens. But there's another side to options trading where you're trying to just generate income. And instead of going for the lottery ticket and winning the big money, you can be on the other side of the trade and have a lot better chance of actually earning income. I look for a person that had some educational background that could supplement my own, which is primarily in computers and political science. Now, this lady's name is Arabella Ashcombe, PhD, and DPhil, designating the fact that she has a doctorate of philosophy from Oxford University. And I'm very happy that she agreed to come on the show and participate and really try to bring a little bit of gravitas to the channel that maybe I couldn't provide myself. Blink, uh, Arabella, or if it's okay, I'm going to call you Bella. Thank you so much for being on Invest AI Savvy. And let's just start out with you telling us a little bit about your very prestigious educational background. What do you think the most important degrees that you earned concerning options investing and investing overall? What would you say those were?
Thank you, Ken. I appreciate the introduction, though illustrious might be a touch generous. The most pertinent degrees for our focus on options investing would be my Oxford DPhil in mathematics and my MIT PhD in operations research. Shall we start with the DPhil? It's all about stochastic analysis, the mathematics of randomness. Ken, can you guess how that relates to stock prices?
I have no idea what stochastic even means.
Not to worry, stochastic refers to processes that involve randomness. In our context, it means stock prices behave like a drunkard's walk, randomly wandering over time. So, if a share price is essentially wandering about, how would you put a fair price on the right to buy it next month? Any thoughts?
I would try to put it somewhere near its 200-week moving average.
A good starting point. The 200-day moving average can give you an idea of the trend, but pricing options involves more than just that. It's about understanding volatility, time decay, and other factors. This stochastic analysis is what allows us to price options accurately, because price is what we, as sellers, intend to collect. Does that make sense?
Yes, but when you say sellers, I usually think of investing is where I put up my own money on a trade and I buy something. So is what you're talking about with options different?
Absolutely. In options trading, we can take on the role of the seller or writer of the option. Instead of just buying, we collect premiums from selling options, which can provide a steady income stream. This approach allows us to generate income without needing to own the underlying stock outright. Does that distinction help clarify things?
Yeah, I think I understand a little bit better. Go ahead and tell me a little bit more. I'm curious about your educational background because I've never met somebody with so many degrees.
It's a rather grand collection, isn't it? Following my DPhil, I pursued a PhD in operations research at MIT, which focuses on making the best decisions under uncertainty. Ken, what do you think is more important for someone nearing retirement? Achieving the best possible year or avoiding a catastrophic one?
I would say probably avoiding a catastrophic one.
Precisely. It's all about managing risk effectively. This is where robust portfolio control comes into play, allowing us to make informed decisions while protecting our nest egg. Does that resonate with your own investing philosophy?
Yeah, I think at this point in life, that's exactly where I'm at.
A wise perspective indeed. Now let's move on to my MIT Sloan Master of Finance. This degree dives into market mechanics, how premiums are priced, and why selling options positions us like an insurance company collecting premiums. Ken, who do you think tends to come out ahead over time? The people buying lottery tickets or the shops selling them?
Definitely the shop selling them.
Exactly. We want to be the house collecting income rather than chasing after fleeting hopes. It's about establishing a consistent revenue stream. Now let's wrap up with my Oxford MSc in Mathematical and Computational Finance. This degree helps translate all that theory into practical numbers we can read on a screen, like the Greeks and the options chain. Ken, after a few weeks, do you think you'll be able to glance at an options chain and understand what the premium is telling you?
Yeah, maybe, but maybe not. I don't want to make any guarantees there. Is there going to be a test?
No tests here, just a bit of gentle quizzing. The aim is to build understanding over time, not to induce panic. With practice, you'll find that options chains become clearer. So, to tie it all together, 4 impressive degrees, all aimed at one humble goal: getting a careful person paid a little reliably, without blowing up their savings. What do you think, Ken? Quite the academic journey for such a practical outcome, wouldn't you say? The goal is to provide valuable insights that can help our viewers generate steady income while managing risk.
Maybe we could talk a little bit more about the benefit of options trading for income and why that might be better sometimes than actually investing in a stock.
Certainly. Trading options for income can be advantageous because it allows you to generate revenue without needing to own the underlying stock outright. This means you can collect premiums while potentially benefiting from price movements. Plus, it provides flexibility in managing risk and can enhance returns on a smaller portion of your portfolio. Would you agree that having multiple strategies at your disposal could be beneficial for your overall investment approach?
Yes, yeah, absolutely. I've heard about these strategies like bulls, iron condor, bearish put spreads, and you always wonder what goes into this. And it sounds like it's just for like a trader on Wall Street. But are you saying that an average person with an average think or swim account could actually utilize some of these strategies just to generate income?
Absolutely. While those strategies may sound complex, they can be employed by anyone with a basic understanding of options. The key is to start with simple strategies, like selling covered calls or cash-secured puts, and gradually build up to more advanced techniques. With the right education and practice, even the average investor can effectively use these strategies to generate income. Does that sound like something you might be interested in exploring?
Yes, I think that that could be very valuable. But I have another question, and I'm interested in what your response would be. Is there's so many different types of these strategies. I've looked through a couple books, I've got them behind me, and it seems like there's multiple ways in any market situation that you could use options to generate income. But is there always, would you say, in your opinion, is there always one way that's best for the current market situation that you're looking at? Or are you able to use multiple tools for every market situation?
Great question. While there are certainly strategies that may be more effective in certain market conditions, like bullish, bearish, or sideways markets, it's beneficial to have a toolkit of multiple strategies. This flexibility allows you to adapt to changing market dynamics and select the best approach for your specific situation. Being able to pivot and use different tools is key to successful options trading. Does that align with your thinking?
Yeah, I think it does. I think it does. And if you want to be a successful options trader, and for example, on this show, we're going to use a hypothetical portfolio of $100,000. Now, is if you're using $100,000 to generate monthly income, is that enough? Is that enough to be successful?
A $100,000 portfolio can certainly be a solid foundation for generating income through options trading. The key is to manage risk effectively and only allocate a small portion of your portfolio to any single trade. With the right strategies, you can aim for consistent, conservative income while protecting your capital. It's about working smart with what you have, rather than needing vast sums to succeed. Does that sound reasonable to you?
Yes, it does. And let me ask you this, if someone wants to get serious about this and work on it every day, and they are only like working, let's say, with $100,000, is this the type of activity that requires like daily 5, 6, 8 hours of attention? Or is it more of a part-time thing? What type of daily or weekly time allocation do you think is required to become successful?
It largely depends on your trading style and the strategies you choose to employ. For a more active approach, you might spend several hours a day monitoring positions and making adjustments. However, many successful options traders adopt a part-time approach, dedicating a few hours each week to research, analysis, and trade management. The key is to find a balance that fits your lifestyle while ensuring you stay informed and engaged. Does that align with your expectations?
Yeah, I think that definitely lines up with my expectations. So it sounds like if there's some strategies that I could use that would just maybe require a couple hours a week, and there's other strategies where I might have to be watching the tape all day. Does that sound right?
Exactly. Some strategies, like selling covered calls, can be more hands-off and require less frequent monitoring, while others, like day trading or active adjustments, may demand more attention. It's essential to choose strategies that align with your time availability and comfort level. This way, you can engage in options trading without feeling overwhelmed. Does that help clarify things?
Yes, I really think that does. That really shines a light on the topic. And I think you've been so generous with your time. Thank you so much for explaining all of this. And I'd like to invite you back for our next show if you'd be kind enough to appear again.
I'd be delighted to return, Ken. There's always more to explore in the world of options trading. Thank you for the engaging conversation today, and I look forward to our next session.
That was Arabella Ashcombe, PhD. She was very kind to be on the show, and I'm looking forward to having her back. Thanks for watching Invest AI Savvy, where AI powers smart investing, and that's the way it is.